Hey there, speculators. It's Rod, Futures on Fire and TDG. Traders Dev Group. We make software, strategies, provide tools and training for active futures traders. Hey, just want to do a quick kind of Rod's recap, highlight something that took place today as the Russell got kind of pounded. I was highlighting here on our free Telegram channel. You can look at the description below, depending on where you're watching this, for information about how you can join our free Telegram channel, free forever, where we post literally hundreds of ideas every single month. We're using the weakness today in the Russell to actually express a options trade by taking advantage of both the volatility, the expansion in volatility today as the overall broad markets were falling, and then especially some increase in volatility in the Russell and the IWM. So what we do here at Futures on Fire is we use the stock index futures to trigger and inform our decisions on when we want to also express trades using some of the popular ETFs like SPY, Q, IWM, Diamonds, TLT, things like that. And it's no additional work for us. And actually the futures, since they tell the future, they don't really tell the future, but they will tend to lead often the actual price in the ETF as well. So you're kind of getting ahead and selling into that, in this case, selling puts. So here's what I was talking about. Using weakness in the R2I to establish a position in IWM, September 25, 147 puts, selling to open for a credit of around $3. Let me walk you through the thought process there. This is the 30-minute on the RTY. Today, the Russell Stock Index Future contract, this is a 233 EMA, our trend line, came up here, banged up against it, and boom, sold right off. Okay, there's ways we teach and train about filtering out of this first drop. It doesn't have the proper separation for the T line, but down here it does. And this blue line here is tracking actually the price of the IWM. Okay, so the candles are the price of the Russell Index futures, and over here is on this axis is the price of the actual IWM, which is going to be highly correlated to the Russell, of course. All right. So as we came down here, we got this signal down here. This is where you have a choice, or I make a choice, as to whether I want to express this trade in one way, two ways, or just sort of skip it. And what I chose to do here is, as we sort of chopped around here, I'm looking to the left, and right here at 147.50 is the price of the IWM at the time. So that's how I chose. I'm generally going to want to use about the 50 delta. Now, the way I chose to express this trade is by just selling cash secured puts. Not everyone can do that. You need to understand the risk associated with any time you're short calls or puts. So you could also do it as a spread, and where you would sell the 50 delta and buy maybe the 20 delta and create an actual spread. Now, you're going to have defined risk with that trade, but you're also going to have less potential reward because you are buying that protective leg. So it depends on your particular situation. But I just want to point out how, again, I didn't look specifically at an IWM chart at all. I simply just overlaid the price of the IWM on this chart and knew that it was 47.50. Went over and selected it. Here's what it looked like on TastyTrade. You can see that it actually, while the IWM only closed at 147.92 and was trading around 147.40 at the time in which I put on the trade, I traded it 3 times today, selling for a $3 credit and covering anywhere between 220 and 250. So just sort of rinse and repeat, and it just chopped around down there. We had a couple bites at the apple today, a couple bites at the apple. So again, takeaways here: using our hybrid indicator, extreme turn money points, which identifies some turning points in the market. We're able to identify an opportunity where we're looking for the IWM to either bounce or at least not go down any further. In this case, it sort of consolidated and then did move up. You can see it closed at the IWM closed at, I think, around one. Well, we just looked at it, right? Where did it close? Closed at just shy of 148, and the Russell now is trading 1483. Okay, 1483. So there was that trade today, just using, again, the opportunity of an extreme turn money points buy and expressing it by selling puts, which is a bullish strategy. Also, real quick before I drop tonight, I don't often kind of throw shade on things, but I'm starting to get a little ticked off with some of these Ninja and some other indicator shops. Again, I don't have they make some good stuff over there at Ninjacators and Ninja Rankos. We use their Rankos, ninja.co. So this is Ninjacators, but this particular thing that they're charging $300 for, just real quick, they call it a Zorro or the Z. here's what it's doing. It's literally just putting a 50% retracement with a little bit of an envelope around it, okay? So if you can see this on here, this is a 50% retracement. You draw in the fibs from a natural swing high to swing low, or swing low to swing high. Let me show you, we have that exact same thing. I set it up over here. You can do it on any, so here's a fib retracement. I have it set to 50. Watch, here's my Z. Okay, put a little envelope around this right here, and boom. There you go. All right. And I only point that out is because here at Futures on Fire and TDG, yes, we have some hybrid indicators, and yes, we do have some subscriptions that that provide access to those. But believe me, things like the money points have a lot more logic and testing going into them than simply drawing a 50% fib, putting a little envelope around it, and calling it a trading strategy and charging $297 for it. So anyhow, hopefully if you've seen that or some others, I've saved you $297. And what we're going to actually be doing at Futures on Fire very soon and the TDG Pro Trade Room is we're just going to turn everything into sort of a mega membership sort of thing, where for a very reasonable monthly fee, you get the trade room plus all of the software plus all of our strategies. As long as you're a member, everything we're doing is included. So there would no longer be anything separately. Because what we're really finding is whether you really have time to actively day trade every single day or being a trade room, you still do need to spend time with myself and my other trading partners to get the most out of any strategy, any indicator. You got to kind of see it in action and then adapt it for your own particular style and particular situation. I think without that kind of live interaction, at least at some point, many people don't get much benefit out of some of these software strategies and indicators just left on their own. Okay, so anyway, there's the Zorro Futures Trader. It's a 50% fib. All you got to do is drop fib, remove all of your other levels, and just put the 50% retracement in here. All right, I'll leave it there for tonight. Again, my name is Rod with Futures on Fire and TDG, reminding you to stay green and trade like you mean it. If you found this video useful, helpful in any way, dig the content, you like the UCLA Bruins, whatever the case may be, please hit the subscribe, like the video, turn on notifications, all that general YouTube stuff. It does help the algorithm. We're trying to grow this channel and help out as many futures traders. And even if you don't consider yourself a futures trader, you can use the futures markets to inform and maybe get ahead of some great trades in popular ETFs like SPYs, Qs, IWM, Diamonds, TLTs, GLD, etc. All right, stay green, trade like you mean it. We'll see you at the next update. Thanks.